Welcome back, investors, to Ticker Time News. I'm Adam, and today we're going to talk about Lemonade, ticker symbol LMND. Many investors are quick to dismiss Lemonade as a highly overvalued and overhyped insurance company. But the fact is, Lemonade's business model puts it somewhere between an insurance company and a tech company. Lemonade has massive potential, and a few factors that separate Lemonade from traditional insurance companies are the year-over-year growth of 84%, fueled by a strong brand, effective marketing, and high customer satisfaction. Their status as a certified B-Corp, which means they meet certain criteria standards for doing social good. Their heavy use of reinsurance, which combined with their B-Corp status is intended to lower margin volatility and support growth. Their focus on artificial intelligence and machine learning in their branding and corporate structure gives Lemonade a massive advantage over their competitors. Would you like free Bitcoin and free stocks? Stay tuned, details are coming up at the end of the video. Now back to Lemonade. Lemonade is an insurance tech company that describes itself as rebuilding insurance from the ground up on a digital substrate and an innovative business model. By leveraging technology, data, artificial intelligence, contemporary design, and behavioral economics, they believe they are making insurance more delightful, more affordable, more precise, and more socially impactful. Lemonade has the potential to be a great long-term investment, especially if you can get Lemonade at a discount below $80 a share or even below $65 a share, and we'll touch on that in a moment. Lemonade's brand has resonated with consumers. Gross written premiums, GWP, grew 84% in 2020, 147% in 2019, and 422% in 2018, and about 90% of Lemonade's customers said they were not switching from another insurance company. Lemonade is popular with younger users who haven't had insurance before, and this is a positive for the company's long-term growth outlook. As these users grow older, their value to the company will increase as long as they don't switch to another insurance provider. Think about this. The need for insurance grows in line with wealth and age of Lemonade's customers. Customers who bought Lemonade renter's insurance approximately 4 years ago spend 62% more on their renter's insurance today. Clearly, Lemonade's customer base is loyal to its brand. Lemonade's long-term growth plan looks something like this. Acquire young customers who are typically looking for renter's insurance or even pet insurance. These customers are underserved since their policies have smaller premiums, so they are cheaper to acquire. Retain these customers for 10 to 20 years, at which point they may be paying 10 times as much in premiums as they do today. Retaining users for decades is of course not a guarantee, but I'm optimistic that Lemonade can pull it off, given its fantastic 4.9 star rating on the App Store and Google Play. Lemonade achieved a Net Promoter Score, NPS, of above 70 in an industry that typically scores much lower. Many of the world's largest financial institutions have single-digit or negative NPS. NPS is a rough measure of user satisfaction. So far, the growth has been rapid, and there are many reasons to believe that it will continue. Are you enjoying this video? Make sure to like this video, share this video, and click subscribe to join our family of investors. Now, Lemonade's total addressable market in property, casualty, and life insurance premiums amount to about $5 trillion globally and accounts for 11% of the gross domestic product, or GDP, in the United States. With Lemonade offering these types of insurance directly to consumers, it's easy to get excited about the idea of Lemonade taking over a $5 trillion industry and becoming the most valuable company on the planet. But let's not get ahead of ourselves. The insurance industry is very competitive and fragmented, mostly due to strict regulations that prevent significant divergence between insurance offerings. You know, the old switch and save ads? Well, they have been effective for traditional insurers. Can Lemonade's technological advantage be enough of a divergence to capture more market share than some of the current insurance giants? For reference, Anthem is worth $92 billion, and Progressive is worth $54 billion. A market cap somewhere in this range seems like a reasonable long-term bull case for Lemonade, which is currently worth $6 billion. If they continue to grow GWP at the current rate of 84% year over year, they could match Anthem's GWP in less than 10 years. At a 30% growth rate, it would take about 17 years. Even if it takes 20 years, 1,000% returns in a decade or two are much better than the market average return. And this doesn't factor in potentially better margins from their high-tech approach or even higher multiples given for a higher growth rate. You can start to see the potential Lemonade has, which is why I really like this company long term. Now, there are a few components of Lemonade's business that are so new that only time will tell whether they are benefits or impairments. Lemonade is a certified B-Corp, which means they are a business that meets the highest standards of verified social and environmental performance, public transparency, and legal accountability to balance profit and purpose. Normally, it would be a red flag if a potential investment was not primarily focused on generating shareholder returns. However, Lemonade's explanation for being a B Corp actually makes a lot of sense. In addition to digitalizing insurance end to end, they have also reimagined the underlying business model to minimize volatility while maximizing trust and social impact. In a departure from the traditional insurance model, where profits can literally depend on the weather, Lemonade typically retains a fixed fee, currently 25% of premiums, and its gross margin are expected to change little in good years and in bad years. When Lemonade has a very good year, they give excess profits to charity. This should, in theory, stabilize their margins, making an investment in Lemonade more predictable quarter after quarter. Let's talk about profitability. Lemonade is not a profitable business right now. As an extremely young and fast-growing company, it's in shareholders' best interest that Lemonade aggressively invest in growth. Overall, it seems like Lemonade is making good progress towards eventually becoming profitable. They spent $80 million on sales and marketing in 2020 versus $94.4 million in revenues. This is a very high ratio that should definitely decrease over time. This expense decreased in absolute dollars since 2019 thanks to more effective marketing campaigns. Given how effective their marketing campaigns have been at driving growth, I view this high spending as a positive. Lemonade's high-tech platform should also benefit the economics of scale since their general and administrative expenses shouldn't grow as quickly as their revenues. Lemonade offers a long-term growth story in an industry that's typically stagnant. That alone makes it well worth a look. But given the novelty of their business model and current valuation, I think it's likely that patient investors can get a better price if you are thoughtful with your entry and dollar cost average over time. As far as an entry point, under $80 a share is good. Under $65 a share is great. Relating to Bitcoin for a moment, Lemonade had its own death cross on the daily charts back on May 12th. The death cross occurred 4 trading days after Lemonade hit its bottom at $58.83. That would have been the perfect entry point. So make sure to set your stock alerts, and remember, you're looking for under $80 a share and under $65 a share. What do you think about Lemonade as a long-term hold in the insurance business? Let me know in the comments what you think. And if you found value in this video, make sure to like this video, share this video, and click subscribe to join our family of investors. Remember the free Bitcoin and free stocks I mentioned earlier? Well, stay tuned, details are coming right up. And as always, if you've watched till the end, you, my friend, are totally awesome. Thank you so very much for watching, and I will see you in the next video. You can help out the channel and earn free money while doing it. First, earn $10 worth of Bitcoin by signing up for a BlockFi interest account and depositing $100. Plus, the added benefit to using BlockFi is that you will earn interest of up to 8.6% annually on your cryptocurrency. Second, earn 2 free stocks worth up to $1,850 by signing up to Webull and depositing $100. Click the links below to get started.